From the following data, we have to calculate maximum permissible bank finance under three methods suggested by Tandon committee. Even though there are three methods, only the first and second method are in practice. Third method considered as very stringent, so it is not in practice now. So you are given information about their liabilities, creditors, other current liabilities, bank borrowings. Total is 410. And current assets given as raw material, work in progress, finished goods, receivables, other current assets. Total is 510. And total core current asset is 200 lakhs. This is applicable only for the third method, which is of course not in practice. Okay, but let's have some idea about it. Let's see what is the first method. See, in first method, what happens is we will be arriving at the working capital gap by comparing the current asset with current liability. When we say current asset, we take entire current asset, but when we say current liability, it is only current liabilities excluding bank borrowings, because that's what we are trying to find out, right? Excluding bank borrowing. So excluding bank borrowing means this creditors plus other current liabilities is the current liability considered for this purpose. So 510 minus 160, that is the working capital gap. So the first method says 75% of the working capital gap can be funded by the banks. So whatever is the working capital gap here into 75%, that works out to 262.50. So this is the eligible bank finance as per method 1. Then let's move on to method 2. Same numbers. Okay. Method 2 says only 75% of the current asset should be considered for this purpose, and that should be compared with the current liability. Then eligible bank finance can be arrived at. So already we know 510 is the current asset. 510 into 75%, that should be compared with the current liability of 160. So now you get eligible bank finance as 222.50. So now look at the difference. In the first method, the eligible bank finance is 262.5, whereas in the second method it has come down. So second method comparatively it is moderate. First method is very liberal, second method is moderate, and third method is even more stringent. How? Look at this. Third method says we have to consider only 75% of current asset minus core current asset, and that should be compared with current liability for arriving at the eligibility. We know current asset is 510. We know core current asset is 200 given in the question. So 510 minus 200, that is 310 only can be considered for funding purpose in that 75%. Okay. And that should be compared with the other current liability of 160. So what you are getting is 72.5. Look, it has even more come down from 200 and here we had from 262.50, it has come down to 222.50, and it has come down further to 72.50 in the third method. So it is considered as very stringent, this is considered as moderate, and this method is considered as very liberal. So what banks will do is most of the time they'll arrive at under method 1 and method 2, they'll compare and they'll select whichever is lower. Okay, so here if you note that MPBF decreases gradually from first method to second method, then to third method. Here the firm has already availed the bank borrowings, right? Already they have availed the bank borrowings how much? 250. And here 262.5 is eligibility, here 222.5 is eligibility, and here the eligibility is much lesser. So look at here, firm has already availed the bank loan of 250. It means as per first method it can still avail 12.5 lakhs, and as per second method it can still avail more. Or is that possible? No, they have already availed 250. Second method says eligible bank finance is only 222.50. So as per the second method and as per third method also they have borrowed excess. It means they have to bring down their borrowings. So as per second method and third method, they are not eligible for additional financing because they have already availed the maximum, or they went beyond the maximum. And for your information, again I'm repeating, third method is not in practice.
How to read balance sheet, how to perform financial analysis using ratios, cash flows, fund flows, how to do financial modeling for bank loan purposes using CMA report and cash budget, how to assess credit facilities like cash credit, overdraft, letter of credit, bank guarantee, term loans. If these are all the areas you wish to learn and achieve mastery, we can help you out. Our comprehensive course, Credit and Financial Analysis Mastery, is for you. To know more details, just come and see FAMB. I'll share the details with you.